Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, welcome back. In today's video, it's not about hype. It's not about price or predictions. It's not even about crypto as most people understand it. Today is about structure. It's about plumbing. It's about the invisible machinery that moves trillions of dollars every single day, and why that machinery is being rewritten right now. Because whether you realize it or not, we're standing at a historic inflection point, the kind of most people only recognize after it's passed. And by the time the headlines catch up, the opportunity is gone. But before we dive in, as always, I want to thank everyone who takes the time to comment, like, subscribe, and share. These things really help me and help the channel grow and get all this information out to people who really need to understand what's happening in the crypto market. Let's get into it today. The Internet of Value. Ripple has never been about sending money faster. That's the surface level explanation. That's the brochure version, ladies and gentlemen. The real vision goes much deeper. What Ripple is building is what many insiders call the Internet of Value, a system where value moves as freely, cheaply, and instantly as information does. Think about email. Before email, communication was slow, expensive, and fragmented. Letters, couriers, fax machines. Each country, each company, each system doing things their own way. A banker in London in 1920, sending a trade payment to Tokyo, would spend days on letters, telexes, and confirmations. Now imagine doing that with XRP in seconds. Email didn't just make communication faster, it standardized it, ladies and gentlemen. Now imagine doing that for money, not cross-border payments, not just remittances, but every form of value exchange on the planet. That's the scale we're talking about. A $10 trillion market, and most people are still arguing about charts, which I just can't believe. Every day, the charts didn't do this, the charts didn't do that, why this, why that, oh my Lord. Then everybody is missing the entire thing. I'll have my rants throughout this video and towards the end, so stay tuned. But that always makes me laugh. Why this is like Amazon. Before Amazon, in the early days, Amazon sold books, rare books, niche books, books most people didn't care about. And critics laughed. They really did laugh. They didn't see the platform. They didn't see the structure. They didn't see the infrastructure. They didn't see the flywheel being built underneath. Ripple is in that same phase, ladies and gentlemen. What looks like payment company today is actually a liquidity network in disguise. A network designed to sit at the center of global value flows. Not a 100 billion market, not even a trillion market. We're talking about a multi-tens of trillions of dollars system. Jeff Bezos didn't start by selling everything. He started in a garage, shipping books one at a time. Ripple is in garage phase, building the rails while the world debates price charts. Here's what makes today different. For years, the vision was theoretical. The technology was being built. The rails were being tested. The institutions are talking openly. The BIS, central banks, market infrastructure, providers, the DTCC. They're no longer asking if this transition happens. They're discussing how fast it happens, ladies and gentlemen. Let that sink in. And that's where the clock starts ticking. The DTCC statement that changes everything. Recently, the DTCC made a statement that should have stopped the financial world cold. They said they are attempting to digitize decades of capital market infrastructure. Not over decades, but in roughly a year. Think about that. Systems that took half a century to build are now being compressed into a matter of weeks. This is not evolution. This is a rapture. A sharp break from the old world into a new one. This is like Henry Ford, ladies and gentlemen, compressing decades of automotive experimentation into assembly line efficiency. The DTCC is doing the same with capital markets. 50 years of evolution in roughly a year. the DTCC authority layer. Now let's slow this down, folks, because names matter. This wasn't a random comment. This wasn't a blogger. This wasn't a crypto influencer. This came from Nadine Shah, Managing Director of DTCC Digital Assets. DTCC, for those who don't understand the gravity, is the backbone of U.S. capital markets. They clear, settle, and custody quadrillions of dollars in securities annually. So when Nadine Shah says DTCC is attempting to compress 50 to 55 years of capital market evolution into roughly 50 weeks, ladies and gentlemen, let this sink in. This is not optimism. This is operational urgency. This is so important. And if you looked at yesterday's video, this is a continuation from what we're talking about. So if you're new here, please go back and watch that video because this is building on to that, okay? She didn't say someday. She didn't say over the next decade. She said now. That tells you everything you need to know about the pressure building inside the system. Why foreign exchange works the way that it does. To understand what's happening, you need to understand one critical concept. Foreign exchange does not scale horizontally. Currencies are not all exchanged directly with each other. Instead, the system collapses around vehicle currencies, liquidity hubs. Why? Because liquidity is expensive. Risk is expensive. And no institution wants to warehouse hundreds of currency pairs. So the system naturally converges. Always has, always will. Think of FX like trying to build a bridge connecting every island in the Pacific to every other island. Instead, you create canals, hubs, like the Panama Canal of Finance, channeling vast flows efficiency. Liquidity is the real power, ladies and gentlemen. Liquidity is the secret sauce. You know, everyone I like to talk about the secret sauce, but this is a main part of the secret sauce. Not narratives, not marketing, not speculation. Liquidity determines speed, cost, reliability, scale, and liquidity doesn't distribute evenly. It concentrates. Once it starts concentrating, something powerful happens. The system begins to reward that concentration. Lower spreads, faster settlement, deeper markets. This creates a flywheel. Liquidity attracts liquidity. And once that flywheel spins fast enough, it becomes self-reinforcing. Krugman's framework, why markets converge. This convergence isn't new. Economists like Paul Krugman have explained this dynamic for years. Larger market volumes reduce the time to acquire matched currencies. Compressed spreads reduce inventory risk for market makers. Key points. Market makers do not want to warehouse dozens, let alone hundreds, of currencies. Risk is expensive. Capital is inefficient. Market converges, always. Why a bridge asset is inevitable. Banks don't want to hold dozens of foreign currencies. They want one neutral bridge, one ultra-liquid settlement, asset that can connect everything without friction. That's the holy grail. And that's why XRP was designed to be. Not a replacement for fiat, not a competitor to local currencies, but a neutral connector between them. A bridge. A German bank needing Turkish lira no longer holds lira in reserve. Instead, it uses XRP as a bridge. Instant settlement, minimal exposure. The bank can focus on its business, not juggling currencies. Why does price matter? Why price does not work the way people think. Here's where many people get confused. A low price does not make an asset better for payments. In fact, it often makes it worse, ladies and gentlemen. Large payments require deep liquidity. If moving $1 million moves the market, the asset cannot function as a settlement layer. Liquidity matters more than unit price. Always has, always will. David Schwartz, destroying the cheap XRP myth. David Schwartz, Chief Technology Officer at Ripple and Chief Architect of the XRP Ledger, has repeatedly explained, price alone has nothing to do with payment efficiency. For larger payments to work, a buy or sell cannot move the market. If $1 million transaction shifts price, the asset fails as settlement layer. Paradoxically, very low price, often smaller market cap, thinner liquidity, worse settlement performance. Institutions don't look at cheap, they look at depth. Why network effects change everything. Once a vehicle currency is established, Its dominance becomes self-unifying and self-justifying. Not hype, not belief, but math. More users equals more liquidity. More liquidity equals lower costs. Lower costs equal more users. This is market structure, ladies and gentlemen. Ripple executives, liquidity is a flywheel. As Ripple invests in XRP infrastructure, institutional grade tooling, financial services, use cases, more institutions come on board. Liquidity, they bring liquidity with them. Liquidity attracts more participants. Ladies and gentlemen, imagine dozens of banks moving trillions of dollars. Each bank joins bringing liquidity. The system becomes self-reinforcing, a digital age version of historical banking hubs like London and Amsterdam in the 1700s. Why this took so long? People ask, why did this take years? Because you don't rebuild the financial system overnight. You don't plug in a new settlement layer and hope everyone adopts it. You build, you test, you integrate, you coordinate, and only when the foundation is ready do you flip the switch. ODL and flip the switch explain, ladies and gentlemen. Ripple has explained this rollout clearly. First, they connect using familiar fiat rails. Then, they improve speed and transparency. Only after markets mature do they flip the switch to ODL. This phase strategy is intentional. It's how banking actually works. And right now, we are watching more institutions reach that third phase. Ladies and gentlemen, this is not a transition. It's a break. This is not a slow transition. It's a sharp change compressed into a short window, driven by technological maturity, regulatory clarity, institutional pressure, global efficiencies. Once embedded into settlement flows, a vehicle currency cannot behave like a speculative asset. Utility replaces narrative. Volatility collapses at scale. Why supply and demand matter now? Here's the part nobody can escape. Fixed supply, rising demand. You don't need a degree in economics to know what that means. When institutions need liquidity, not exposure, they don't care about your entry price. They care about functionality, supply, demand, and non-sovereign reality. The dominant vehicle asset of the past was sovereign. The dominant vehicle asset of the future is neutral. Let that sink in, ladies and gentlemen. That's very important. Fixed, supply, ultra-liquid, real-time. Institutions don't debate ideology. They source functionality. And when demand meets a fixed supply asset embedded into settlement flows, the outcome is mechanical. The multipolar world myth. People talk about a multipolar currency world, but markets don't like fragmentation. Payment system especially. They converge. They always converge. The difference this time, the vehicle asset is not sovereign. It's neutral, digital, real-time. BIS final nail. Self-justifying dominance. Once a currency or asset becomes established as a vehicle, its dominance becomes self-justifying, ladies and gentlemen. Not because of a narrative, because the system itself rewards its use. Lower costs, faster settlement, deeper liquidity. That stage, replacement isn't debated. It's economic. Why the window closes quietly. This is the dangerous part, ladies and gentlemen. There is no announcement, no countdown timer, no headline screaming, last chance. The window closes silently. Liquidity deepens, utility locks in, price becomes irrelevant to function. And suddenly people say, how did we miss this? So here's some final thoughts before our rant. This was never about getting rich quick, ladies and gentlemen. This is about recognizing infrastructure before it becomes invisible. Because once infrastructure works, nobody talks about it anymore. They just use it. And by then, it's already too late. If you understand what you're holding, truly, right, short-term noise doesn't matter. This is not a trade, it's positioning. And history is very clear about one thing. Those who understand the system before it changes are never the ones chasing it afterwards. Well, ladies and gentlemen, there's so many things happening right now. It's remarkable. With the video yesterday that we spoke about what the DTCC is doing, and today what we just spoke about, it's a forced march over what the BRICS are doing now with the unit and with gold being used as a settlement commodity, a settlement function, okay? So the DTCC, as we spoke yesterday, now has no choice but to come with their answer to the West side for the West side, right? Because the East side is moving full steam with commodities. And I believe it's a coordinated attack on the entire Western financial system, in my professional opinion. Because you're having deliveries all the time now with precious metals. They almost can't deliver everything. You had margin requirements raised over in Asia. Everything's happening in Asia, and the legacy media doesn't really report on this, right? So what I believe is going to happen, and this is not financial advice, money's going to flow out of metals at some point and into cryptos. And when it does, it's going to push things up. You have people right now selling their precious metals at a profit to sovereigns and governments that are never going to ever resell what they buy. They're going to hold on to these forever. Okay? That's the big thing that's happening right now. And as we go forward, I don't think crypto prices are going to stay suppressed much longer. I believe that they're being hoarded right now as prices are being suppressed by the big time players who are going to control where we're going. Because the big thing, ladies and gentlemen, that the commodities market provided the West was the ability to set prices in dollars on everything. That one structure is under attack right now by the BRICS and the unit. They're also attacking the treasury and the dollar in coordination, right? So when you look at XRP, and Ripple is genius as far as I'm concerned by acquiring G Treasury because they're going after treasury markets, right? Okay. Ripple wants to be neutral. Banks don't want to have to use other banks, coins or tokens. They want to use something neutral. XRP allows the Western side of the tranche to have that control again in the markets. They don't want to cede the control that they've had always in setting prices, setting everything. I know people get very, freaked out about that, but they want that control back. So when you look at our map, how we have things and what's really happening and why this is so super important. In my office in Singapore, I have on the wall a cutout from a New York Times article when Tiffany's actually wrote about how hoarding silver was bad when the Hunt brothers were making their play to hoard silver before Silver Rule 7 came in the late 1979s, right? Before the CFTC got involved with that. And, in my office there, I love going back to that. That's why I love having visuals to see things and what it is. Hoarding silver was bad, basically what they said. I laugh at that now because everybody's hoarding everything. The metal markets, right? They're going to keep going higher, because there's a function demand for them now. And as we were talking about yesterday, right? And this is the truth of the matter. I don't see the floor for metals dropping very much because they need this to settle trade. That's the big thing. They're going fully back to what the Bretton Woods, the bank, BNCOR, that system about unit exchange, and that system that they bade the unit around that we almost used, but we didn't go with that. We went with the dollar reserves with the IMF situation where there could be a reserve currency, allows for a reserve currency to dominate. Nobody ever thought that that finance would be used as a weapon it is used today, right? They didn't think about that then. So now you really have two competing ideologies about where world trade's going to go, and that's a lot to do with everything that's happening. Part of the reasons why we put everything up on these charts and these graphs and I put out there, right, is so that you can have an understanding of where you're going, because we're in it for the long run, right? So before you make any kind of maneuver, make sure why you're getting into this, right? If it's in the long run, say it's in the long run before prices move against. Now, I believe things can't stay cheap forever is because money's going to cycle out of certain things and it's going to find undervalued assets. That's what's going to happen. People take profit from one place and go into another place. That's just always what happens. But I believe that cryptos are not going to be, at some point next year, they're going to be priced much higher, and the average person is going to miss out to accumulate as much as they can. You want to enjoy red days. I rant and rave a lot, right? But you got to realize the red days are days you can accumulate for your future. You should always save money out of your paycheck automatically right away. When you get paid, okay, in good financial stewardess of your own situation, save money immediately. Take money automatically out of your paycheck and put it into any form of investment, 401k, whatever you're doing, so you're saving for yourself. Always do that. You reward yourself. But these depressed prices and the cheap days of what we're seeing right now are going to be long gone. And I'm not looking at leverage or trading. I can almost retype the letters that we sent out to people when we were talking about all the metals, gold, silver, copper, and just take out the metal names now and put in different cryptos. Because now I'm having the same conversation with people that this is where the world is going to go. This is what's going to be used on the West side. It's total control. So the DTCC has to now really catch up to what's happening over in Asia, because the Chinese aren't taking prisoners. BRICS aren't taking prisoners. What they've set up is a direct challenge. So a lot of exciting things are going to happen, right? And again, why we go back, Swift is using this tokenization, Swift is using that. Swift is so far behind that they got issues right now, and they're going to end up using proven systems already. They're not going to be using certain ones, and I really don't care what they say day to day, because at the end of the day, if they could sit in boardrooms and listen to what people are truly saying, they'd have they are, and they can't really come out and tell you what they're going to use. A lot of things in finance are masked always, whether they do one press release or another. That's not really what they want to do and why. Anyone that's been in the game long enough at certain levels understands this, that sits there. But you have to understand something, ladies and gentlemen. The BRICS nation is creating their own system of the commodities markets. They want to control pricing. They want to control delivery. They want to control trade. They want to control everything. This is the main financial commodities war and crypto war going on right now. Okay, so if you can see where we're going and why, this is the most important thing. And why I believe, and this is my personal opinion, a lot of the cryptos that everybody loves won't stay cheap forever, because they're going to be gobbled up. And that's why they're being gobbled up right now. So, that's kind of what it is. And when you're going home for the holidays and you're trying to have a conversation with someone about this, ladies and gentlemen, you don't have the DTCC moving at this record pace that most people, and it's boring headlines, right? Most people don't want to click on this or read about this. It's really, really boring. And when you're standing in the trench or your foxhole with your buddy, and that's it, in the beginning, right? It takes a lot of conviction. You got to have that Gucci conviction to know why you're doing what you're doing, because you're going to get mocked at. You're going to get laughed at. People are going to think you have tinfoil in your head, that you're nuts. Okay, but every day, and like at least the exoneration that we've had now in the metals market for things we've said for 3 to 4 years, I'm so excited about what's going to happen and where we're going. I don't even know what to say. I got a smile on my face from ear to ear. And we're going to look back on these moments as nothing like turbulence on a plane ride to a vacation. And you got to understand something. When I spoke about Jesse Livermore, trade size, ladies and gentlemen, I position trade. I look at very, very long time frames, right? That's what I look at. Our Patreon's going to be launching in the next 24 to 48 hours. The link will be here. And if you want to listen to a lot more rants and really what it's like from tips from the pits and really what goes on behind the scenes and listening to people talk about things where nobody matters how many views you have, nobody matters how many likes you have. It's really about just self-education for yourself and trying to get ahead for yourself and your family to learn a skill and a trade craft that you can use forever. Please do sign up and join us. And, you'll find a lot of things like right there. I try to condense everything in the end. But most of the time when I go off script, I know people are saying I should just make videos that be completely off script, but those type of videos are going to be in our Patreon at different levels where I don't really talk from anything like that. But I want everyone to have a very happy holidays, to be excited. I want you to understand what you hold and why. I want you to understand when you get involved in something. It's no different when we look at physical concessions, right? When we go look at a piece of ground and we're looking at the ppm, the particles per million, I'm doing so much research about what's in there and why, what I can recover, where the world is going in trends. I look at a world today where there's not enough commodities. One day the world will go to war over rice, and there's just not enough right now. The greatest attack that will be against the dollar and the treasury system is gold and the ability to set market prices. I fully expect the silver rally at some point will come to somewhat of an end going higher, because they're going to do some things with leverage, the same way with the Hunt brothers, what happened with them. They're going to have to slow this down, but at the end of the day, they're hoarding everything. So what did they do for the last couple of years, ladies and gentlemen? They suppressed the prices of all precious metals so they could hoard it as much as they could. Now they let it go. They let it rip loose. Some point, ladies and gentlemen, that's going to happen with cryptos. That's what's going to happen. Have a great day. Always stay emotionless and watch XRP closely. This could be a defining moment. Ladies and gentlemen, this content is for informational entertainment purpose only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, this game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes, smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.